The stock market goes up and it crashes down. One day your investments are doing great, and the next it feels like everything is falling apart. That's the reality of investing. It's a roller coaster. And if you are someone who wants steady income, those bad market days can feel scary. When the market crashes, stock price fall, and sometimes so do dividends. That steady stream of money you were counting on, it could shrink or even stop. For people living off investments, this is a big problem. But here is some good news. Not all investments crash and burn. Some are designed to keep paying you even during tough times. One of those is SCHD, the Schwab US Dividend Equity ETF. In simple words, it's a collection of strong US companies that are known for paying reliable dividends. So, why do so many investors love SCHD? Here are the top reasons. Low fees. It costs very little to own this ETF. The expenses ratio is only 0.06%. That means if you invest $10,000, only $6 per year goes to fees. Number 2. High liquidity. You can easily buy or sell it anytime during market hours. Number 3. Strong companies. SCHD owns big names like Coca-Cola, Pepsi, Johnson & Johnson and Texas Instruments. SCHD has been tested. It survived the 2008 financial crisis, the 2020 COVID market crash, and high inflation and rising interest rates. And through it all, it kept paying dividends. Let's say you want to earn $4,000 every month from SCHD dividends. That's $48,000 per year. As of April 2025, SCHD has a dividend yield of about 4.14%. To earn $48,000 per year from a 4.14% yield, you would need to invest around $1.33 million. I know that's a big number, but don't get discouraged. You don't need all of it now. Start small, reinvest your dividends. Let time and compounding do the work. Dividend investing is like a snowball rolling down a hill. You earn dividends, use them to buy more shares, and those shares earn even more dividends. This is called compounding, and it's one of the most powerful tools in investing. SCHD is amazing, but don't put all your money in one place. Diversify your investment. You can also look into things like REITs, real estate investment trusts, bonds, dividend-focused mutual funds, even side hustles or online businesses. When the market crashes, most people panic, but smart investors, they buy. It's like getting your favorite stocks on a discount. More shares equal to more dividends, and those dividends equal to more shares next time. So don't fear the crash. Take advantage of it. SCHD is not a get-rich-quick scheme, but with patience, discipline, and time, it can help build real wealth and steady income. Remember, investing is a marathon, not a sprint. Start early, stay consistent, and let compounding do its job. This video is for educational purpose only and does not constitute financial advice. Always do your own research or consult a licensed financial advisor before making investment decisions.